Hey guys, Boris from BK Forex Advisor. Great to be with you for another great week of trading in the currency market. Hope you guys are all enjoying the Twitter feed at fxflow.com. I certainly enjoyed doing it. Before I start, as always, please note the following video is for educational purposes only. No claim is made as to the accuracy or efficacy of any trading strategies contained in this video. As always, please do your own research. This week, I want to go back to the idea that I talked about last week, the idea of scalping during periods of maximum liquidity, because I actually adhered. I know you'll find this very surprising coming from me who likes to just flit around to 100 different ideas. I actually pretty much promised what I was going to do last week, which is I traded euro on a pure flow trade during periods of maximum liquidity, as you'll see for the most part. Other currencies, I experimented with other different strategies. I don't want to show you those charts because there's so many other different trades in it that's kind of polluted. But the one that is most pristine in terms of showing you the value, the absolute critical, I think, edge of only scalping during times of maximum liquidity is the Euro chart this week. So without much ado, I'm just going to go through every single trade this week, show you the basic setup. Of course, just to review, the basic setup that I do on the flow side is if the price goes through the 00 or the 50, depending on the move, if it's going to the downside, I'm shorting. If it's going to the upside, I'm going to go long with a 10 target, 20 stop. The idea being is that momentum is going to carry me towards my target during points of maximum liquidity, which we defined ideally as 8 a.m., 12 noon New York time, which is 1300 to 1700 GMT, or the second period, which is the European period, of about 4 a.m. to 8 a.m., which is 9 a.m. to 1300 GMT, which is not as good, but good enough to give you maybe a try for the period. So I want to show you what have been the results for me this week as far as doing this particular setup in the euro dollar. Here's the euro. I start out, this is Monday the 14th. And yes, I know it's not exactly 4 o'clock, it's 3:30, but you know, close enough for our purposes. One of the things that I really want to emphasize, and something that I think is absolutely critical, is that every single trading model is a guide, not an absolute. Nothing is absolute in trading. Nothing is ironclad, written in stone. If it is, then you're basically becoming incredibly inflexible and you actually hurt yourself. I'm going to show you a couple of ways where I actually hurt myself this week by being too inflexible in the trading model. The key thing is that you want to use the guidelines in the most disciplined manner possible, but give yourself enough wiggle room to adjust to the time frame. So of course, okay, it's not 4 o'clock, it's 3:30, but that's close enough in my book for the points of liquidity when the market is going to move. As you can see, the trade works very well. Boom, boom, plus 10. The next trade, I get stuffed on. This is a 35.50, and it's actually an interesting trade. It's because I think there was so much movement already at that point. And of course, we're not coming at the front of the European session. We're really coming in the middle of the European session, sort of like at 10 o'clock in the morning, when you're not going to get as much follow through. And I get stuffed on a minus 20. So now I'm minus 10 for the week. The next run comes at the beginning of the US session, and it works very well. So now I'm back to even. So I'm plus 10, minus 20, plus 10, plus 10. And for all of those of you who are screaming at me that this is a very, very negative risk-reward ratio, you're absolutely right. Yes, I have to be 70% accurate in order to be successful on the setup. So that is why I want to run you through all the numbers this week so you can see why I give myself these kind of parameters. So we go on, go on, go on. I'm going to ignore this trade because it's not a legitimate trade, because it's not a run of the 3,500, and I didn't take the break of the 00 because here, I mean, I should have probably. It was a 3 o'clock trade. It was just a little too early, so I decided not to take it. So that's not a legitimate trade. We're not going to count it for our purposes. Here, a perfect trade in New York session. They'll break the 3,500s, and this is what I'm talking about the need of being flexible. We come in here to about plus 9. And and at this point, the price just simply doesn't get to my target, and I decide it's what is that? Bird in hand is better than two in the bush, or half a loaf is better than none. I decide to take my profits here, so I'm plus 9 instead of plus 10 on the trade, and ultimately the trade would have worked. It would have gone up against me almost to my stop, and then ultimately would have come in. But think about this possibility. This is why it's so important to be adjustable in this particular setup. If I didn't take the profits at plus 9, and if I got stopped out, what's my net position? My net position is not minus 20. My net position is actually minus 30 because I was almost, or minus 29. I was plus 9 in the money, and I gave that back, and I gave another 20 back. So that's why it's so important, especially when you're doing these short-term setups, to take the money when you can. You generally want to, obviously, want to stick for the, for the plus 10. But if it's not coming, I just grab the profits and I go. All right. So now I'm plus 9 for the week. The next moves over here. I forget what day this is. This is the 16th. So here's we run through the 50, another plus 10. So now we're plus 19, right? Here, and this is actually a really interesting situation. I had the setup here, but it was right before the news. And those of you who know that this particular platform is absolutely horrid in the news, and I just actually pulled my my sell order here, it would have been a perfect trade. If you trade through good platforms that basically have really steady feeds, you're not subject to this particular problem. But because I pulled my bid, it would have been another plus 10, but we don't count it because obviously I pulled it. So we're plus 19 for the week. Keep going, keep going, keep going. Another plus 10 over here, nice legitimate trade from the 50 to the 40. So that's now plus 29. We're going to ignore both of these trades because they're counterfeit trades, which I don't want to count because even though they're profitable, they're illegitimate for this particular setup. And then we go into today. And here's what happens to today. Now, I think today is a really interesting study in exactly the kind of trading that would happen. So I take the 50 right over here. And what happens is it goes barely in the money for me and then comes back out. And then it just flounders for, this is a 15-minute chart. So 1, 2, 3, 4, 5, 6, 7. Practically 2 hours. And here's where I make a tactical mistake. Now, it's that's just natural. You're going to make mistakes like this when you exploring the setup. Once it goes into below 50 and it doesn't really penetrate after 2 hours worth of momentum, I should have simply closed out this trade for a small loss. The key thing with all good momentum trades is they should work within the first 15 minutes of the trade, maximum first 30 minutes. If by that time they're not working, you're not looking there to make money, just looking to try to get out with minimum amount of losses. I didn't get out with minimum amount of losses, so I'm minus 20. So now I'm back to plus 9 for the week. But things turn around, as they always do. In the New York session, maximum liquidity. Bragi goes on the offensive. Euro flies. I take the 3600, so now I'm plus 19. And I take the 3650, and I'm plus 29 for the week. Plus 30 points on a very, very clean setup, ignoring all my other stuff. I think I wanted to just simply show you the purity and the cleanliness of how this strategy works. Now, I will show you the other thing that I think I wanted to share with you this week is, and bear with me, where is it? Here it is. I want to show you my equity curve for the week. And I finally did it, I think, in a much more intelligent fashion than I used to do it before, which is I did the equity curve on a pure net pip basis. One of the things that I wanted to show you in this particular equity curve is notice the tightness of the drawdowns because I'm only trading during points of maximum liquidity. Even if I'm not following my pure protocol of doing pure flow, whatever it is that I'm doing within the points of maximum liquidity, control my risk and basically give me that upside momentum or counter momentum trades that really control my drawdowns. Look at how tight this is. I started 0 pips for the week, 10, minus 10, basically hanging around 0 for a couple of days. Then a move up, a small drawdown, a big move up, very tight drawdown over here. I basically control my risk, small drawdown, and back up. Overall, the net for the week is above 70 pips with all of my little scalping. That is absolutely great. If I could get that every single week, I would take it in a heartbeat. That is just absolutely great returns if you can just simply stick to the rules of trading only during maximum liquidity sessions, as I showed you before. Now, I'm going to be gone next week because it's George Washington's birthday, so of course my daughter is on vacation and will be out. But the week after that, I'm going to show you one of the most interesting hacks that I discovered this week. Has nothing to do with trading, has nothing to do with strategy, has nothing to do with anything except a great psychological solution of how to minimize random, stray WTF trades. And that is one of the reasons why my equity curve has been so tight this week. Hopefully, this will be a great hack for all of you guys to learn. I'll talk to you next week. This is Boris Schlossberg. We're going to be at the New York Traders Expo 21st, 22nd, 22nd. I have a panel, and then Kathy has a show. I'm going to guest star at Kathy's show, 4:35 p.m. for Kathy, 1:30, 2:30 with me on the panel. Anybody who's going to be in New York, Marriott Marquis, 44th Street and Broadway, come see us. Love to see you. Boris Schlossberg for BK, over and out. Follow us at fxflow.com on Twitter.